Tuesday, the 8th of December. Welcome to Frontier Open Bell. I am Bosin Amofaye. Let me introduce my panelists. Joshua Debisi, the banking analyst at Vetiva Capital Management. Ali Kansacho is a CEO and founder at Rich Frontiers Management in Nairobi. And Akitude Sulaiman from Greenwich Merchant Bank. And of course, Temple Ashaju, a guest host and analyst, joining us also here on the program this Tuesday. Let's run through the equities market. Where did we finish off on Monday? The Nigerian market went down by 0.2%. Dangote Cement fell on the day. Zenith Bank shares also down. Banking sector about 0.8% in the negative territory. The Ivorian market shoved the Nigerian market aside by 0.24%. Ghana was a public holiday for the presidential election. Very peaceful, looks like a holiday in paradise over there when we spoke with one of our correspondents last night. And then the Egyptian markets down by 0.27%. Kenya lost about 1%, and South Africa GSE up by just around 0.2%. Let's take a quick walk through the Eastern market, where Tullow Oil says it's getting a Kenyan license extension to December next year. I thought the Kenyans were no longer digging for oil, but it looks like Tullow Oil is sticking around whatever happens until the Kenyans are ready to go big on crude oil production. British American Tobacco in Kenya is getting a new managing director. I understand that is now a Kenyan and not a foreigner. Ali will have a very big deep for us on that. Then the IFC, which is the private sector lending arm of the World Bank, is giving Rwanda's I&M Bank $10 million to increase the bank's lending to small and medium enterprises. And Tanzania November inflation data out today. Ali, let's start with Tullow Oil, then the BAT story. Why is Tullow Oil still sticking around?
So there were two announcements yesterday. Africa Oil and Tullow Oil were given a license extension until December 2021. As we've previously discussed, Tullow Oil said at a minimum they required WTI crude oil to be trading at around $50 for this particular resource to be effective and monetizable. We remain below that level. And then, of course, we had that big transaction where Total bought Tullow assets in Uganda, but skipped buying this Turkana asset in Kenya, which signaled that they saw richer pickings in the Albertine Basin. And I think what this really is a free option. The government is giving Tullow Oil a free option until the end of December 2021, hoping that prices recover and what is marginally viable becomes seriously viable. For now, I remain doubtful that this is going to get off the ground given the circumstances in the oil markets, and my perception that there is no major V-shaped recovery coming in the near term, although folks are getting pulled up, as we all know. So for now, I think the government's given Tullow and Africa Oil a free option till the end of December next year. BAT Kenya, this is interesting. I think this is the first time we've had an indigenous Kenyan appointed as the chief executive officer of BAT. BAT trading at a price earnings ratio of about 10, a very big dividend paying stock. They tend to pay out about 95% or thereabouts of their earnings per share as dividends. So the share price tends to look at the money markets as a comparator. First half results were marginally up. EPS was 26.79 versus 25.28, which is a seriously good outcome and speaks to the resilience of tobacco demand. But also they've been doing a number of other tweaking the business model in different ways in order to reduce cost, aggregate supply, and they have a lot of supply going into the Egyptian market. So an interesting stock for those, probably has a dividend yield of about 7.5%. When you compare it with T-bills, it's not bad at all. I&M Bank, Rwanda, which issued, I&M Bank, the main bank, issued a profits warning yesterday. Most banks have to issue profits warnings because if you issue a profits warning, if you expect your earnings to be 20% less than the previous year, and if we look at Q3 earnings, I think practically everybody's got to issue a profits warning. But the IFC pumping in $10 million to increase SME lending, that's a good sign for the bank and for the Rwandan economy. The likes of IFC have been big supporters in terms of credit lines for I&M as well. Tanzania November inflation data due out today. I expect it to remain well behaved. Tanzania is a big agricultural economy. And the locusts, which are expected in Kenya at the end of December, have not got down there. So we should continue to see reasonably good production out of the agricultural sector. Just to touch on a couple of other stories, Ethiopia, as you know, have been talking for a long time about divestments in the telecom sector. There was a lot of excitement. That looks as if it's being accelerated, notwithstanding the situation that continues to unfold in Tigray province. Though I saw a lot of comments that the expectations the Ethiopians had were very high, and those might not be met, particularly given the political risks we've seen unfold.
Interesting scenario around the East African and the Horn of Africa's corridor. Thank you, Ali. Let's bring it home to West Africa. And if we're speaking to Nigeria specifically, news coming through this morning, breaking news that the Nigerian government has, in agreement with the labor union, have decided to cut petrol prices down to 162 naira per liter. We don't understand what really this really means with the government ought to do petrol subsidy removal, and now the government is back at fixing the petrol prices again because it's got a face-off with the labor union. This just threw the whole subsidy thing out of the window. We need to go back to the drawing board, whether the government will continue to be arm-twisted by the labor unions, whatever that means, and not longer subject to the dictates of the market. I think this just made a whole nonsense of the whole subsidy thing. In the meantime, we got new data yesterday from the Statistics Office. Total trade 34.15% to 8.4%. In the third quarter, DMO December savings bond auction, you can see the yield for the 2-year and the 3-year paper around 1.5% on average. Oando is delaying its third quarter earnings because says there were no auditors, again, because of the face-off with the SEC. Since around 2018, 2019. Good news for Nigeria's startup in the fintech space. CredPal says it's secured $1.5 million for credit card launch across the country. That's good news for the space, deepen financial inclusion. And Senegal says its outstanding public debt will be around 9.2 billion CFA when the year 2020 comes to a close. There's a whole lot there, including the rollout of a new bond offering by Fidelity Bank. Looks like the banks are now the ones fast and furious on the field in terms of raising. Let me start with the banking guys who are, Joshua, these are your guys here on the streets doing commercial papers. We saw United Capital just last week or so. Now here is Fidelity Bank as well.
Yes, so I think I've spoken about the fact that we would see a lot more capital raising in the fixed income space from the private banks, most especially, due to the fact that the market is ripe for this kind of movement. But I think there's no surprise there, as long as I think speaking. Actually, I want to just touch on what the Federal Minister of. Based on what the Federal Minister of Labour said, they are actually not doing that much. They are able to renegotiate with the NNPC. They say based on the fact that the NNPC is able to make some cost savings. I don't know how true that is. There's not enough transparency with the NNPC to know whether or not they're just, selling us dreams in that regard. But I'm not entirely convinced. At the same time, we can't really say that there has been a complete shift away from the regulation of that space for now. As long as the downstream marketers are able to sell their prices and sell their petrol and get decent prices, I think that we're still in a relatively good position. And petrol is still quite expensive, I think, overall. So overall, it's not that deep yet.
Well, Joshua believes it's not that big. Akintunde Sulaiman, what do you think?
Thank you, Basit. For me, I think it's more of the policy somersault. I think we need to have some sense of consistency in how we govern. Just some months back, the government, some years back, the government said they were handing off subsidy. Some months back, they said they would fully deregulate to some extent, and market forces can determine prices of the product. And just again, we are here again saying, you know what, we are going to put a cap to it. This is what you can charge. This is what you can pay. I think for me, it's more of the policy consistency. We need to be precise and we need to follow it through. We recognize that it is a tough time to take off all those form of subsidy from the currency, from electricity, and as well from PMS. But if we're going to follow through one, let's follow through one. Not going back and forth and that. So like Joshua said, I think prices of petrol is still relatively expensive when you compare it with neighboring countries and what others are paying. What I feel, however, is that our cost of production is substantially very high, and that has impacted how much this can be sold. And as well, the exchange rate factor plays its part in all this. But I would expect that the government maintain some of policy consistency that will help the market, and it will help investment trickle down into that sector. Because if we keep changing our goalposts, we might be scaring away the needed funds that are meant to trickle into the sector.
Well said. To touch on very quickly, a tempo on this Oando, it looks like this problem with the SEC, which has been a year, 2 years, and counting, looks like it's not going anytime soon for this enlisted energy trader.
Well, it's true, Boson, because again, you recall that they had the issue with SEC a couple of years ago, and till date, they've not been able to fully get out of the woods in that regard. Now we've seen that they have not been able to file their earnings up to date. Again, you recall that they had a court injunction, I think in 2019 or thereabouts, preventing them from holding their 2018 AGM. That has also held them back from presenting their 2019 audited financial statements, as well as all the quarterly financial statements up until the Q3 2020. So all this put together is dragging this company, and that's in a way has also affected the sentiment of investors into the company. The highest I think it has done so far this year is a little above 3 Naira in share price. Now, given the notice that they put out to the stock exchange yesterday, it looks like they might be having some kind of a bit of a intervention from the regulators. They probably will reach a truce and allow this company to be able to appoint its auditor, financial auditor, so that they can look at their books and, of course, come up with something in the future. Considering the fact, again, that one of their farm tanks somewhere in Apapa a couple of weeks ago also was gutted by fire. So when you put all this together, yes, it's affecting the sentiment of the company. And of course, we're talking about the fund of a lot of investors currently tied down in this company.
Interesting how Oando will be able to resolve this quagmire that's been around the company now for a couple of years. It just needs to be sorted out one way or the other. It's getting so long. The regulators are bogged down. The courts there, the exchange is there, the company is there. Investors, both retail and big-time investors, are locked in there into this energy company. Once a very big name on the Nigerian bourse, but now just almost a shadow of itself due to these accounting, auditing, investors, shareholders problem. over time. Maybe we're going to ask Ali sometime later if he has any idea how to resolve very thorny issues of this nature. But let's go to Southern Africa first. With the South Africa's 1.1 billion rand relief program for small-scale farmers, net FX reserves $51.257 billion. That's about $20 billion, or are up higher than Nigeria's current FX, around $35 billion US dollars. Implats is inviting bondholders to send 1.6 billion rand of its 6.737 convertible bonds. And in mining, in Zimbabwe, the Great Dyke investment, which is linked with the Russians, selling 4.4% stake to fossil, and Mauritius inflation at 3.1%. The island is still moving ahead despite that major oil tanker disaster a couple of months ago, which ruined the Indian Ocean paradise. Ali.
As you know, as we've discussed before, I'm really impressed with the South African authorities' ability to target interventions effectively. We've spoken about these lower electricity tariffs that they've introduced, and here you're getting a 1 billion rand relief program for small-scale farmers. When I disaggregated South Africa's GDP, the one sector that was doing well this year was agriculture. They've had a banner year in the export of oranges and citrus fruits, in part because people feel that vitamin C helps them with the virus, though that's clearly not entirely the case. And now they're probably going to have a boon with this problem with Australia, where the Chinese are chucking on tariffs on Australian wine. And as you all know, South Africa has a big wine operation going on. So I welcome this intervention. I think it makes good sense, and it's the second intervention which I think is praiseworthy from the South African authorities. Net FX reserves, $51.27 billion. That's a serious chunk of change compared to anybody else on the continent, and it speaks to the underlying resilience of the South African economy. Implats inviting bondholders to sell back some bonds, 6.37 convertible bonds, probably given the interest rate movement, 6.37% is probably something that Implats is trying to take off their books quite sensibly. Great Dyke Investments, I saw that announcement, 4.4% stake to fossil mines. Yeah. This, of course, the Russian intervention in Zimbabwe, and I think also Mr. Oromo at Afrexim Bank is somehow also involved in putting this together. It shows that there's now movement, and you want to see other investors join the consortium. So I think that's a positive statement. I don't know who Fossil Mines Limited is, but on the face of it, that's a progressive step. Like you said, Mauritius had that awful oil tanker and has suffered from the fall off in tourism. Island economies dependent on tourism have probably been the worst hit economies in the pandemic. But this is a pretty well-organized government, well-organized economy, and they will bounce back very, very well. 3.1% looks to me pretty benign.
You're talking about agric intervention, for example, Joshua Debisi. If you look at a country like Nigeria, 1 billion rand in South Africa, look at exchange rate, 16 to $1, about 400, nearly 500 to $1 here in Nigeria. It's a whole two different worlds entirely if you look at the exchange rate. But do you think we can still do more for farmers? Is there anything that is a takeaway from how the Kenyans have been, the South Africans have been able to handle things so far?
Well, I think just to put it simply, because our problems are quite vast and almost sometimes seem insurmountable. But just to keep it simple, I think the biggest thing we can do is to adopt a sort of support structure. There's a lot of emphasis in Nigeria on giving farmers fertilizer and things like that. If you are not able to get your products to the ports and get them out as quickly as possible, then there is no way that they will be able to grow. There is just no way. because in fact, transportation in Nigeria is so bad that people, in the north will produce some amazing agricultural raw products and can't even sell it within the country. So they don't even have enough market for all of their goods. Now, of course, in a situation like that, if they were able to export, they would make more money and be able to reinvest back into their community and into their agriculture. However, the fact that their roads are bad, there isn't quick access to ports. There isn't, in fact, there is no standard in Nigeria that allows for farmers to be able to, actively sell their products. We can't sell our products, very easily to the USA or the EU or the UK simply because our products do not meet their quality standards. Now, if we had a stronger emphasis on maintaining or upholding those standards in Nigeria to begin with, then we would have less of an issue without it because it's a reputational problem. So we would have less of an issue with exporting. So if you don't fix the institutional problems that are at the foundation of these things, there's no kind of support that you can give, whether monetary. You can give a farmer 10 billion naira, and the truth is, he can build the biggest, best farm. But if it's in the middle belt, if it's in Benue, if it's in Jos, by the time his products get down from the hills of Jos, before they make their way to the port in Apapa or Warri, wherever, or even to Abuja, half of his products are spoiled. So he has already made a loss on that. The ones that he can sell, he might not even be able to sell it at such a decent price. And there's no way he's ever going to even imagine trying to export. So there's no kind of monetary investment you can make at this stage that will fix the institutional problems that are underlying and have been underlying for decades, I believe. The truth is, if you don't fix the trains, if you don't fix the roads, and you don't give these people access to the ports, fix the ports, and then fix our standards, then all this money, all this investment will not go very far.
I agree with you. But when you look at the Nigerian financial services, Joshua was touching on this a bit earlier, Tempo, in terms of look at Fidelity Bank doing 75 billion naira. Is there a likelihood that the banks need this money, or they need it for lending, or they need it just to stay afloat?
I think it's more of lending, because if you look at what Fidelity Bank is quite heavy on, it's on SME lending or SME funding. And you know that with the way the economy has panned out so far this year, there hasn't been enough opportunities for all these retail investors or all these SMEs to be able to recoup the investment that they've put in all of this, their businesses generally because of COVID-19 and co. So they will certainly be having, that Fidelity Bank will now be having more of NPL ratio that will be rising, and they will need some more capital to be able to address all of these issues. It's part of the reasons why they're raising this 75 billion naira to be able to sort that out. And I know that United Capital, which you mentioned earlier too, has done a similar thing. They've also raised some fund. I think it's the tranche 2 of the initial commercial paper that they set out to do earlier in the year. So you're going to be having a lot of this. In fact, I should also add that in Edo State, the state government on its part is also supporting a hospitality company by the name River Jemison or something. They are also carrying out an SPV initiative, raising some 25 billion naira. So this is sort of what we'll be seeing more towards the end of this year, as we've been saying, and of course in the early part of next year, just as Joshua mentioned earlier.
It's going to be a whole lot. I'm sure Akintunde Sulaiman is in the banking industry, understands what we're saying pretty well. But let me just bring on the North African markets very quickly, and I'll ask Sulaiman to speak around the sector a little bit. Egypt had, the Minister of Finance was on Bloomberg this morning, an exclusive interview, talking about the outlook for a 4% growth in 2021-2022, and that Egypt is ready for JP Morgan emerging markets bond listing, likely returning to Eurobond market early next year. The EG Bank, that's Egypt Bank, Suez Canal Bank, are looking at 10% stake each in this real estate joint venture. Tunisia is suspending the 2021 finance bill review because there were problems around the plenary room where that was being conducted. And Morocco is planning a dollar-denominated debt on the global debt capital market next year. It looks like everybody's going to the Eurobond market except Nigeria. Suleiman, what's going on? Egypt is going there. Cote d'Ivoire 2 weeks ago did about 1.6 billion US dollars, and now Morocco is doing the same.
I mean, I mean, Cote d'Ivoire was like the first African country to tap into the Eurobond post COVID. Yeah, and you would say, I mean, it's understandable why most of these countries have been staying away from that market. It's simply because the market is saturated. Every country is lending, every country is borrowing from their population. So that already is talking into, I mean, into the capital, into flows that should go into other countries. And because there's some sort of protectionism across the economies, across markets, every country is borrowing to grow out of the recession or to fund it, the palliatives they are given for the pandemic. So we would say that is why a lot of countries have been staying away from the Eurobonds market. But now, since activity is picking up, activities are picking up, economies are beginning to open, we are seeing a lot of markets, a lot of economies tap into the Eurobond market. I anticipate that next year, Nigeria as well will look at tapping into that market. This year, we stayed out of it because if you remember initially, we had some allocation, some intent to borrow from the Eurobond market, about I think 1.5 trillion naira worth of in dollar. So, but subsequently we shelved that because we saw the feasibility was low because everybody was just trying to borrow to fund the economy. So the markets we're going to, the European and American markets we're going to as well needed funding. So it just made common sense for everybody to borrow localized. And that is why Nigeria transformed its foreign borrowings to local borrowings. But now, since economies are beginning to open, activities are beginning to peak, we anticipate that going into 2021, we'll see a lot of borrowings in the Euro, we'll see a lot of issuance of Eurobond instruments and foreign borrowings.
Ali.
So what I would say is, in terms of absolute rates, because you've had this tremendous movement to close to zero, negative rates in Europe, when countries look at the absolute rate, it actually looks quite attractive. The issue was that earlier in the year, these credit markets were shuttered to riskier borrowers. But what you're seeing now with Egypt, Ivory Coast, and Morocco is they're telling you, look, you know, we are bulky, we're serious issuers. We have the capacity to issue into this market. Look, if you were a Zambia today, or an Angola, or a Kenya, or whatever, it would be a little bit more difficult. So I think we're in like a muscle flexing moment for countries. If you can go to the market, go and show everybody, yes, I can. And you're getting pretty attractive rates because the whole rate structure has collapsed globally. So even at a 500 over spread, which was what Ivory Coast came at, more than 500 over, it still was the optics of the coupon were quite low. But when you look at the spread over governments, then you get the true story.
Then you get a true story. And I think that's where some sovereigns might just be a little bit sluggish in terms of approaching the markets. Again, what are the fundamentals behind the borrowing, even though funds are really cheap? Like you said, I think investors are going to cherry pick, as it were, moving forward. Again, the whole lot to tie into your economy if you're going to approach the Eurobond market. I think we'll leave it there for today. Thank you so much, everyone. Templar Shaju, thank you so much for being on the show. Ali Khan Sacho, we appreciate your time. From Nairobi Rich Frontiers Management, CEO and founder, Joshua WC Banking Sector Analyst at Vertiva Capital Management, and from Greenwich Merchant Bank, Akintunde Suleiman. Thank you so much, gentlemen. We'll see you again tomorrow. Bye for now.